everyone. I hope you guys are having a wonderful day and making some really good trades. And let's dive in right into the analysis here. So, as you guys can probably tell, today was actually a bank holiday and for US and Canada. I thought the markets would be closed, but apparently they were trading. So, we had a nice gap up today, starting off the week with a blast. Gap up open, run 82 basis points on the SPY, new all-time highs. So at this point, I would have to say the X wave is invalidated, and you're actually extending further on the third wave here for the on the 45-minute even as well. So to me, this looks like the third wave extension there, and then now you need a a pullback and then another high, another all-time high. That's what I see now. So that's what I think is going to happen. Again, I could be wrong, and maybe this is not the a 1-2, and it's just a it's part of a fifth. It's part of a a bigger count. But regardless, we're looking for a significant top, but this can go on for a while. And for the triple Qs to break the all-time highs would be extremely bullish for the market, and you would actually extend this fifth wave here, I believe. So this fifth wave would go on, and what you have is just a bigger pullback and a 1, 2, 3, 4, and a 5. So you're going to need a pretty big pump, to be honest, in the Qs, which would probably like propel this to maybe like above 550, right, on the triple Qs. Now this is the extreme bullish case. It's very okay. Well, the sneeze. Oh my god. Excuse me. Maybe the volume is going to be really loud there. But what would be my preferred scenario is if we were to remain below the all-time highs. Now we're about 1.16%, or basically 1.2% for breaking the all-time highs. It doesn't take much. We're almost there. The likelihood of us doing that is probably really likely. Looking at the SMH right now, I think the SMH needs to go higher into the sell area here. So this 1, 2, 3, 4 to 5, this impulse is correct, and we need to continue to extend it. The C wave, there we go. So this needs to extend higher. So you still have about, at the very least, another 2.95% on the SMH. It could go as high as 7%. So a lot more upside in the SMH. Again, the SMH can move pretty significantly in just one day. You get these big dumps sometimes, and you get these big pumps as well. So the semiconductor sector wants to pump super hard, it's gonna happen, in a pretty dramatic fashion. You'll know it when you see it. I've been away on vacation too, so a lot of charts have started playing out. My members have been letting me know. So I've been posting a lot of charts on AMD. I've been covering AMD a lot. I told you guys the move is going to extend most likely to these levels now, which it did. So now you have a corrective move, ABC, and I mean, look at it. We're just nailing the tops here. Beautiful, beautiful, and another one right here, and it actually lines up with a trend line that I had going on. So lots of confluence there. No divergence, so perfect C leg here on AMD. For me now, AMD looks like it's ready to rip back down and go down to the $100 level. I don't know what this means for the rest of the semiconductor market. When we take a look at NVIDIA, in my NVIDIA chart has been invalidated. The X wave is not most likely, in my opinion, not going to be doing this. Some people are still forcing it. I wouldn't. But if you want to make the case that it's going to go pull back, then you're going to need a really big black swan catalyst event, which is most likely not going to happen unless Israel or does something, right? But I won't talk about that too much because for some reason YouTube blocks and censors, and anyone that talks about that kind of stuff. It's very strange how they operate. But yeah, so that's essentially it. What you have now is probably an extension of the fifth wave here, and you're just going to do a 1, 2. This was just a really deep pullback, and then you're in this third wave. So if that's the case, you're doing this count here, and it's just gonna be going higher. And it's just like you're gonna go like NVIDIA. I mean, you could go into the higher into the sell area. This is still a longer term sell area. You could go up to 168 and still be bearish, but you break these levels, it'll just keep going, right? And don't get me wrong, I'm very bearish the economy, but we're not trading the economy here. We're trading the markets, and yes, there's never been so much complacency than all these things. I've read the data on the news, and everyone's getting very bearish now, but it could cause a very big short squeeze as well if everyone's trying to short the top. And I got a few shorts going too, but I'm ready to stop out at any moment. If we break some certain levels, then that's it. I'll get out. And I told you guys too, the TLT for like as far for whatever reason, the TLT count was invalidated, and I took my profits. We've been long since April, been holding it, got beautiful dividends along the way, and now the trend broke. So what you have now is a really big problem in in the TLT, because I believe you took out this high. You took out this high. You met the minimum requirements for a three-wave move, and now you've completely collapsed back down. Right, you did an ABC. I know we have a lot of counts here. I'm just leaving this right now, but I mean I could delete a lot of things here. So just delete that. Get rid of a few counts, because now the bearish move is starting here in the yields and in the bonds, because you have the yield daily cycle breakout, which was clearly confirmed here at the lows at 4.1 around the lows, and then you had that big surge higher, and you also have a trend line break as well on the downsloping trend line for the yield. So this was a clear breakout. This is definitely going higher. Yields look like they need to pull back just a bit here, cool off for a bit, but ultimately continue higher. So we may have truncated. This move might be over now, and we're getting ready to go much higher in the bond yields, which I don't think this would be good. I think the bond market is sensing a big amount of inflation coming, which may come in the form of stimulus, or maybe China stimulus, or whatever it is. I'll clean up the TLT chart, but I'll get you guys a new count for where we're going now. But I think this, if that's happening, then the bond prices are going to continue to go down, and maybe break this pivot. And if you take out this pivot, you'll most likely confirm another impulse down, and this corrective move is going to continue lower and lower and lower and lower, which is unfortunate. Now we're very oversold on the TLT, so we're due for a technical bounce now. I know a lot of people are longing the TLT and expect higher prices, or TMF, whichever one you want to trade. TMF has triple the leverage, right? So, but triple the risk as well. And I mean, it's very oversold on the daily. The 4-hour time frame very oversold as well. And we can even take a look at smart money, see what smart money is doing. Okay, well, they're not longing, but you're getting green crosses. Okay, you're getting some dip buying coming in TLT here. So that's why we're probably due for a technical bounce here in the TLT, come back up, and then maybe the trend resumes afterwards. TLT on Market Cipher got a green dot today. So possible long position on the TLT. Could make for a great long too if yields start to collapse in on themselves, and that would be that's your confirmation that we're going back up for our technical bounce. Now the weekly time frame, you can see here, massive selling, big rollover in the last couple of weeks. Momentum is getting killed here. It's looking very bearish and on the weekly time frame, and on the monthly we've been in a very big downtrend. The downtrend isn't over too. This could just be a consolidation, month-long, year-long consolidation before another move lower in the TLT, which means yields are going higher, right? And I mean, like I can't tell you why they would go higher, and I don't think they would go higher since they're cutting rates. But this is what the chart is saying, right? So it's very scary sometimes when the chart is warning you, and everyone is saying yields are going down, right? And the chart is warning us, right? We had the chart warn us up here when everyone thought yields were just going to keep going up and bond prices were going to keep going down. This was the reversal area, and it collapsed. The yields collapsed down. Now I'm telling you guys that we may have truncated, which means we end the move early, we don't reach our target, and the yields are getting ready for another cycle higher. And if that's the case, then you're going to see 8-9% on the 20-year, and the long end of the yield, long end of the curve is gonna go up. So that's my take right now on the bonds. I've been gone a week too, so I want to continue to to update what's going on here. And then we take a look at the DXY. So the DXY continues to surge here, continues to push higher. And then we have the wave 4 possibly being in now. This is too much of an impulsive move. And when we take a look at the smaller time frames, I think we can make 5 waves up very easily out of this. So now you have an impulse higher. Looks like the DXY also truncated here. And if it truncated, that means it's going up because this flat didn't play out, right? It got invalidated. So now if the DXY is done, then this thing is getting ready for an impulse up, right? And if the dollar is going to strengthen, that I really doubt that equities are gonna survive this big big pump in the dollar. We'll get a pullback obviously, but once this happens, I don't think equities would like this too much. Looking at the overnights, Dow Jones is at all-time highs, continuing to make all-time highs. You have the S&P 500, 5,876, could easily get to 6,000. You're breaking out of the Bollinger Bands. And then the NASDAQ is near all-time highs. The NASDAQ is about to break all-time highs. We'll get back to the individual names. Tesla. Oops. Did I not type in Tesla? Oh, I've been gone too long on vacation. I'm forgetting my symbols. So Tesla, still bearish, in my opinion. I think you need a technical bounce, but another low, and then ultimately a bigger impulse up, corrective move up, and then a final flush down. So for me, the target for Tesla is still 164. Or actually, no, it would be less bearish because we got a pretty nice move up. So there we go. So now the target would be in this area here. So still quite nice. All right, so 177. So that's a nice dip buy if Tesla can get down to there. And then we talked about NVIDIA. Meta is in its final impulse up. We've been tracking this nicely. So it needs a little. It's already correcting a little bit here. So you're getting a nice, corrective move starting. Could get maybe a drop tomorrow, and then final 5th wave higher for Meta. And then we'll take a look at Google. Google is interesting here. Google for me looks like it needs to go higher. 1, 2, very big impulse. 1, 2. You're gonna actually go much higher if the C leg wants to extend up and up and up. But because right now you got a really big impulse here. You got a 1. All right, 1, 2, 3, 4, and a 5. Although this wouldn't be the nicest of charts, but it could also be done. Did we make a new high? Yeah, I mean, like, you technically made a new high. You could have ended here, the X wave, and now it's a 1, 2, and is getting ready to impulse down. Could that be what's about to happen? It could. My dog is looking at me like, what are you talking about? And then Apple. Apple is, in my opinion, getting ready to surge higher in a 1, 2, in a 1, 2, 1, 2 setup. So this bearish scenario is most likely not going to play out, and if that's the case, then it's going to be quite bullish for Apple, right? Because then you got a 1, 2, and the market. This means the whole market is about to moon, right? Because if Apple's going up, you could bet you can put some safe bets that the entire market is about to just going up in a straight line. China stocks are getting hammered back down because they had that big, massive impulse up. Everyone got super euphoric. Everyone's saying, it's time to get into China stocks. And now the Hang Seng isn't doing too much. It's down today. Wow, down 1.41%. So it looks like the Hang Seng could be getting ready for a big meltdown here because it's losing a lot of steam. But anyways. All right, so I think I need to wrap this up. My dog needs to go out. I'll just finally say a few things. So I am still very bearish on the markets, but I'm not closed-minded and I'm not perma-bearish. I think, I'm bearish on the economy as well. I think we need a bigger pullback, but we could also surge much higher here. Now, my swing trades are different from my day trades. My day trades, if the market looks like it's going to pump that day, I'm going to long, right? And we get in some longs, and I post those in the Discord. But if I think we're nearing a top, and it's worth taking some risk to try and short it, then yeah, I'm gonna put some shorts on, and I'll put some stops in as well, because I'm not gonna hold a short and watch the account blow up, right, for no reason, lose a lot of gains that we accumulated throughout the year. Anyways, hopefully you guys enjoyed the video. It's nice to be back on the grind. I haven't talked to the camera, or not the camera, but the microphone and the charts for a while. So hopefully we get some more analysis this week, and we get some nice price action as well. Have a good day, guys. Peace.